Hello and welcome to the Sifted podcast, the show where we help you get to know the brightest and boldest people and companies in Europe's startup ecosystem. I'm Amy, Sifted's editor and your host, and today I'm joined by Alexandre Prot, co-founder and CEO of Qonto, the French fintech unicorn. Qonto banks 500,000 small business customers in 8 markets across Europe, helping them do everything from banking to accountancy, lending, savings, and as of recently, payment terminals. The company is profitable and has 1,700 employees across 5 offices. Its goal is to hit 2 million customers by 2030 in many more countries with a bigger suite of tools and services working with bigger and bigger businesses. Today, we're going to talk about how Alex plans to make that happen. Welcome to the show.
Hi, Amy. Thanks for the welcome and thanks for having me.
We saw each other briefly in Berlin in May, and I know you've also been at Money 2020 in Amsterdam since then too, and obviously Viva Tech in Paris. Why have you been hitting the road so much?
Yeah, it's true. I've been traveling and doing quite a few events lately. I think it's very much linked to our, European expansion and the fact that, we are and want to be also more and more visible. We're also hiring across the different markets, having partners in those different markets. So I'm combining, let's say, these external events with also meeting, our teams internally, meeting potential partners, potential new, people that can join the team. So trying to do that efficiently, but indeed pretty often on the road these days.
So let's start talking about acquisitions. You're one of, I guess, a handful of European tech companies which are still relatively young in the grand scheme of things, but in the interesting position of being able to and interested in acquiring other businesses. What are your plans around that?
So maybe before we talk about the plans, just a quick reminder of what we've done in the past. We've mostly grown organically. So you were mentioning 500,000 SMB customers across Europe. And so most of these SMB customers we've acquired, organically, one by one, basically, and, opening their business account with us and doing more and more stuff with us. But we also made 2 acquisitions over the years. The first acquisition we made was 3 years ago. We acquired Penta. Penta was a small, let's say, Qonto focused on Germany. So much smaller than Qonto, but much stronger in Germany. And as we wanted to be much stronger in Germany, it felt like a very good acquisition for us. And 3 years later, we're very happy with that first acquisition. We acquired Penta when they had about 50,000 customers. We migrated all these customers to our Qonto platform. We integrated the whole team. And now the Penta product and platform have been discontinued, but we're much stronger in Germany. It's a very much geographical expansion acquisition. Then the second acquisition we made was a year ago, a French fintech called Regate, basically for product expansion, doing more sophisticated financial tools for SMEs, but also Regate is selling directly and serving directly accountants, which is a slightly new channel for us. Accountants have always been big partners and stakeholders of the Qonto ecosystem, but now we're also serving them directly, strengthening even more our finance management platform for SMEs. So one geo expansion M&A, one more product or channel expansion M&A. And so now to answer your question about the future, these are 2 dimensions where we see opportunities for us in the future to be stronger on the geo expansion, go faster in some of our existing markets, or maybe launching a new market through an acquisition. And same goes for the product expansion. We have a pretty big and strong team on the product and engineering side. About 40% of our total team is on product and tech. But still, there are some great teams out there, great products that have been built. And so if there are some opportunities for us to go faster, to bring an even better product to our customers, we'd be happy to seize them. Of course, we have to be careful because buying a company is pretty easy. The tough part is actually to integrate and to do that well. And we know that sometimes, it slows down the whole company. Sometimes you break companies when you acquire them. So it's a mix of art and science. And of course, it's not easy. So we have to be pretty careful, not only about, how much we pay, but more about how we process the whole thing, how we align with the existing team and so on. But we believe, and we've seen that successfully in those 2 first deals. So we believe that we can go even faster on our goals through acquisitions.
How would you mark your homework? How well did those first acquisitions go? What could have been improved for the next time?
So I think on the first one, the easier part is that It was exactly the same business model, exactly the same product as we had, but they were just stronger and bigger in Germany. And it was pretty clear that after a year or so, we would sunset the Penta product. And in the meantime, we would basically improve our product for Germany, so the Qonto product for Germany, and migrate all customers on the Qonto product. So from an operations perspective, it was not easy. From a product perspective, it was not easy. But from a strategic standpoint, it was pretty clear, and the direction was pretty clear. And so I think it was an execution challenge, but the idea, let's say, was pretty simple. On the Regate acquisition, which is integrating two products, it's by definition slightly more complex, and also this new customer that we're now serving directly with accountants, it's also a channel that we knew but we're not serving directly, so we're also learning as we're growing on that channel. And so it's more like it's more unknown, so it's not directly linked to the acquisition or the integration, but more that we're entering something which is less known to us, so we're learning more, we're discovering more, and we're also making some mistakes in that channel, which is new for us. But overall, very happy with the ecosystem that we're building, because in the end, as we want to make it much easier for any small business owner in Europe to get started, to grow, to manage their business, of course, accountants are a very, very important stakeholder. And so having this direct link to accountants and making it smoother from banking to accounting, all the way is of course super important. So we have very good feedback from customers, both accountants and SMEs, but it's just the execution that is slightly different from just applying the same playbook as we have done, kind of forever.
And what's been your approach in terms of, obviously, when you acquire those companies, you often bring on board the founders and their teams, and then naturally what often happens is those people sort of see out a certain term and then they decide to leave. And I believe that's what's happened with Regate's founders reasonably recently. How do you approach that in terms of what is best for Qonto, in terms of how long that original team sticks around for? Like what role do they need to play, and then when is it maybe the right time for some of those people to leave?
Well, generally, in most deals, you often have this kind of 2 year, I think it's kind of the market standard, 2 year, either it's an earnout or bonus or integration contract, whatever it's called exactly. But I think this, 24 months on Penta, this is more or less what happened. So they're one of their co-founders who was leading Penta at the time, Lucas, stayed for about 2 years and left when, we all expected that he would leave at that point. And I think the whole integration transition had been made, which was good, and we had someone new running Germany and so on. So that was very, very expected, and I think very smooth transition. On the Regate acquisition, Laura and Alexis, the two co-founders, left more or less about a year after the acquisition. Things were well underway. And it also makes sense for kind of to strengthen the real integration. You also have it's hard to have two cooks, let's say, in the kitchen, or three cooks, and so that's pretty efficient. That when there is no clear goal and need or role for the founders that have been acquired, that they leave.
And so for your next acquisitions, because I believe you're on the hunt, we've obviously spoken about geography and product being some particulars. Are there particular geographies you'd be interested in acquiring businesses in, or particular areas of the product that Qonto would like to strengthen or isn't doing yet that are obvious areas for you to look at?
Mm-hmm. Yeah, well, on the geos, I mean, our key geographies today are, the four markets we launched initially. So France, Germany, Italy, and Spain. More recently, we launched Netherlands, Belgium, Austria, and Portugal. So frankly, any of these 8 markets could be interesting. Given our positions and our growth in France, we're rather looking at the other geos to be growing even faster, outside of France, but still very much focused on the European Union, and actually just for compliance and license reasons. And so most probably in some of our 8 markets. So the focus right now is really on these 8 markets, not even expanding further today because we just launched 4 new markets. So could be any of these. On the product piece, it's mostly around what we call financial tools. So Qonto is really very much the banking at the core. That's what we have at the core of our finance management platform. And around that, we have financial tools, which are all the adjacent topics that are very important for small businesses, such as accounts payable, accounts receivable, cash flow management, expense and spend management. Invoicing is part of accounts payable and accounts receivable, but it's also a very important topic with e-invoicing, so tax compliant invoicing becoming the norm across the European Union. And so on these topics that we started building after the core banking piece, we have built nice products, but we know we can and we want to do much more. So there might be some good additions there, either by having small teams that have been building something really nice there, or maybe larger products that could be a good complement. But we don't depend, let's say, on these acquisitions. We more have like a strategy to build things mostly ourselves, but we also have, if I may say, the luxury, because we've been profitable for 2 years and we have some cash available, to accelerate if we have some good opportunities. But we're not forcing ourselves to do M&A either, precisely because we know it's tough to do it well. It's tough to find exactly the right fits. And so we see our growth over the next 5 years, I would say, I don't know, 80% or so organic, and maybe 20% through M&A.
And Qonto is actually licensed as a payment institution, isn't it, rather than a fully fledged bank? So you have to protect customers' money by separating it from your own payment flow, and you can't offer direct lending services. Is that something you plan to change at some point in the future? Do you plan to become a fully licensed bank?
Yeah, maybe just before answering your question, what you said is perfectly right, except that with the license that we have, which is indeed a payment institution license, we can still do a bit of financing. And the way we do it is by actually offering financing, leveraging our own funds, our own equity. And so we launched about 18 months ago a product called Pay Later, where we can finance invoices up to 30,000 euro. And our customers, if they have, I don't know, to buy computers or laptops for 10,000 euro, we can basically finance those invoices for them, and they repay us within 3, 6, or 9 installments. And so that's already a significant financing offer that a lot of our customers are already using. But it's a short-term financing, so it's less than 12 months, and it's financed with our own funds. So obviously pretty different from what a fully licensed bank could be doing, because they would be leveraging customer deposits to finance credit lines to other customers. And so to get back to your question, this discussion around should we keep our payment institution license, should we move to a banking license, we've had that in the past. A few times we've checked that. We check, weigh the pros and cons basically. And the cons were more important than the pros, especially because you needed to have very important capital requirements. And at a time when we were not profitable, that was seen as more of a stretch and less obviously a good idea for us to do that. Also, we're super busy building the core banking piece, the financial tools, and also getting started with some financing activity like the Pay Later product I mentioned. Now that we're profitable, that we've built already quite a lot of things, and we could potentially become a bank, as a natural next step for our customers, that's something on our minds, and that could happen in the future. We haven't made the decision yet, but that may happen in the future.
And what would that unlock if you were to become a licensed bank? What kind of things would that enable you to do?
Well, I think three main things. From a customer perspective, the first one is indeed more financing options. So not only short term, not only up to 30, 50,000 euro, but it could be longer term financing, higher volumes, and so on. So that's definitely one. The second one is on other products such as savings, investment. So basically the full suite of products that traditional banks can offer, and being really even more replacing traditional banks. A super important number on Qonto is that 78% of our customers use Qonto as their primary account. And so of course, if we want that to further increase, and also as we want to go up market, slightly up market, serving companies with not only 5, 10, 20 employees, but also 30, 50, and even more, of course offering more products including financing, savings, investments, and so on is important. And the third piece is that today we're still partnering with quite a few traditional banks. And as we grow, being more independent from these partners would probably make sense to be, more agile, but also have even more our destiny, let's say, in our hands. Very recently, we built our own card processor. So all the card transactions that are made with our Qonto cards are processed internally, which increased card acceptance rates, which improves product velocity on card products. And so getting a banking license would, in the same way, also enables us to do more internally, to own more of the value chain, let's say, and to be, not potentially dependent on some banking partners' speed. And banking partner speed is, a bit of an oxymoron. And so probably that would help on that side as well.
So is this something we could see in the next year, an application for a bank license?
Yes.
And where would make sense to have it? In France?
Well, we're European and European Union. That's our field, and so yes, it would probably be in France, given the current license we have is in France, payment institution license, passport across the different countries. But it would make sense, and we have pretty good relationship history with the French regulator. They saw us, from the beginning. They saw us go from, let's say, 0 to 500,000 customers with all the different steps. They know us pretty well in terms of, governance, all the things we've implemented. So it would be the natural regulator for us.
To turn to money of a different kind, in November last year, the Financial Times reported that Qonto was talking to investors about a possible sale of shares at a new €5 billion valuation, which is obviously something we've seen quite a lot of scale-ups do recently to try and, give early investors and, in some instances, employees a chance to get liquidity. What was the motivation behind that on your part?
So indeed, we're doing, let's say, smaller secondary round for liquidity for employees, because obviously getting stock options is great, but it's even better if you can, exercise them and get the real benefit of those stock options, over time. We're all talking about, in 3, 5, 10 years, potentially larger, or let's say real exits kind of, and maybe we'll have a discussion around that later. But it's of course also good to have some partial liquidity. And so that's what we're offering to our employees. But the other aspect, which I think those articles were mentioning, was around getting also new investors on board for the next stages of growth. And this is something we'll probably be doing next year. I think we're now very much focused on, operations, execution, our geographical expansion that we mentioned. And so when we have better visibility also on how we want to, further expand, to your question around the banking license, what markets, potentially also, IPO timeline. This is not a short-term goal, but of course, this is also something that, investors are asking. And so we want to be getting clear answers to all that, and then probably doing some larger secondary.
Interesting. Are you also going to be out raising, a next equity round? I mean, you hinted there that applying for a bank license isn't a cheap process. I guess my question is, you're profitable at the moment. In what situation would it make sense for you to go out and raise new funding from investors?
So indeed, we're profitable. We don't intend to be raising additional capital. If we were to become a bank, we would probably not need to raise additional capital. So the main or the only reason why we could raise additional capital is if we do, large or very large M&A deal, paid, mostly in cash, and then we could need more cash. But let's say for the, business as usual, we won't need any additional funding.
So you're not currently fundraising?
No.
And you strongly hinted there about a potential IPO. What are your thoughts and plans around that?
Actually, I was more doing the journalist with myself. So I was doing kind of the question and the answer, because it's a question that, we very often get. It feels a bit like a buzzword, and maybe especially in Europe, where unfortunately we see too few IPOs. And so no, very, very simply put, that's definitely something that we're getting ready for, in the sense that it might happen one day and it takes a few years to get ready. Also, because given we are a financial services company, we have a license today, a payment institution license, potentially one day a full banking license. And these licenses require having your books in order, having your governance in order, having your internal controls in order. All these topics are very similar to what is required to be a public company. So it's not like it's kind of additional work for us. And so indeed we don't know what might happen in 3-5 years from now. It might be an IPO, and so we're just getting, let's say, slowly but surely ready for that. And that was more what I meant. But there is no short-term plans on IPOing. You mentioned, I think, in the introduction that we have 500,000 SME customers today. We're targeting 2 million customers in 2030. So that's really the main goal today. And on that journey, we might have some opportunities to do some M&A, potentially to IPO, but we're not spending too much time on that. We're really focused on growing the business, making our customers still super happy as they are today. As we can see, with this 4.8 star rating on Trustpilot and quite a lot of other metrics going in the same direction. But that's really the key focus for us today.
Are the various stock markets beginning to court you?
Yes and no. I mean, obviously, when people talk about IPO, there is also like the big question of IPO venue and what index and so on. We're not too interested in that today. So we get some emails, but most of the time we actually ignore them.
So it sounds to me like Qonto's in a pretty good position. You're profitable, which a lot of startups aren't. You've got money to finance acquisitions. What could still trip you up? What are the challenges that remain ahead?
Well, challenges are to keep on, innovating, being fast and agile, while at the same time, being robust, being serious on, compliance, on internal controls, on governance. And these things tend to be a bit, let's say, contradictory somehow. And so we're getting the team organized and the company organized so that some people, let's say, have, this kind of serious aspect and robust aspect as, their major, and maybe their minor is around innovation and so on, where other people are much more on innovation, cracking things, testing things, because even if they don't work or even if there's a problem, that's not a big issue. And so if you work in compliance or if you work in fraud, or if you'd rather be on the, let's say, making sure it works well before you launch. If you're on the pure software side, or on the, then it's good to be trying, to be making some mistakes, to launch in beta and to see what happens. If you're doing some fraud stuff, you probably not want to launch too much in beta. That's kind of a bit of the spirit. So of course, it's a bit of a simplistic answer, but that's really the point. And same for the markets. France is our, largest markets, historical markets. So of course, what we do in France is pretty different from what we do in our, most recent markets, like Netherlands, for instance. Netherlands, we just launched a few months ago. We have a very small team, 10, 50 people working on Netherlands, but that's way enough. That's kind of a small startup. So that's way enough to, for the launch, to take off there, to be agile. They can have, a daily kickoff meeting and, be agile, see some good progress, day after day and so on. Of course, it's a bit different in a market where you're pretty mature and where you already have, hundreds of thousands of customers.
And it feels, you mentioned fraud there. It feels to me that fintechs in particular are especially susceptible to sort of frauds and fakes, and we're always seeing headlines that X digital bank has higher rates of complaint or fraud or whatever than high street banks. What's Qonto doing to stay kind of one step ahead of the criminals?
That's a very good question. So first, I think seeing, the industry numbers, I think we're not having higher fraud rate with digital banks or neobanks or challenger banks, whatever the word, versus high street banks. I think it's more that for high street banks, a good chunk of their customers do not even do anything online. So of course there is less fraud, but it's more like our customers, doing things online or not. And if they are, I think the risk might be even lower with more digital products and companies that have the right tools to basically stop fraudsters. Just to give one very concrete example, I think very early on we used IP addresses and MAC addresses, like smartphone, basically serial numbers, kind of to prevent fraud. And we discussed those with the French authorities, and they were surprised that indeed not that many traditional banks were using those. So I think we can be at the forefront of innovation for UX, I mean user experience, but also for fraud topics. And indeed, I mean, banking and payments is a lot about making sure the 99.9% of cases that, are clean, go well and smoothly and fast and so on, and the 0.1% that are not clean are blocked instantly. And so that's the challenge. And so whenever we launch a new feature, meaning a payment feature, whether it's international transfer, local transfer, direct debits, whatever, of course there is this question of, okay, how do we make sure that these 99% or 99.9% of customers or of transactions go through very smoothly, very fast, et cetera, but we also block the other ones. And so sometimes you have some false positives, some false negatives, and the whole game is to lower the ratio of false positives and false negatives. And so technology is very much leveraged through that. We're actually using a lot of Gen AI and LLMs to basically improve our fraud algorithm. The other day I was actually I was very curious to understand how it was working. So I spent 1 hour with the team working on that. And basically they train the computer by explaining, what a fraud could look like. Like, I don't know, if you have, two payments with the same card, like physical payments at two, distant locations within a short time frame, of course there's a problem, and training the algorithm with those things. And then basically the model detects, frauds, and then suggest them to analysts that will check them, and will clear them if no problem. But so we use a lot of technology there, and that's also why I was saying that new offers like Qonto and basically new fintech can do very often a much better job than high street banks.
How else are you using AI at Qonto? What experiments have worked well and which ones have not worked so well so far?
Well, we started using, let's say, AI a bit before it was called AI. So we've used, in our operations on the, customer-facing topics like the chatbot that we've been using for a couple of years now. And so, of course, now we implemented some AI logic and Gen AI logic into that. So today, 54% of our chat interactions with our customers are handled by our, Gen AI chatbots. What's very interesting is that the customer satisfaction, maybe it's a bit sad, but the customer satisfaction rates with the Gen AI chatbot is as high as with the part that is handled by human agents. There's a little bit of a selection bias because usually the human agents gets to slightly more complex cases, but still that's more than half of the chat messages are handled by AI, so that's very important, and that enables us to be really good at customer care. We've always been, but even better today. So 24/7 customer care in all the languages that we support across Europe, and so AI is helping us do that. It's of course also helping the agents to be faster and better when they reply. So on the human part, they also use AI as a co-pilot. So that's one very direct use of our application of Gen AI. Then, so I mentioned the fraud one, which is an important one, but also of course on all our, let's say, internal daily operations, the way our engineers code, I mean, they're using AI now to go much faster. The way our designers are designing their new, website pages or whatever, they're using, Gen AI there. So everyone, actually, we discussed it this morning, not everyone, but 70% of the team uses AI weekly. And so I'm pretty sure that in 6 months from now, it will be 100% of the team weekly and maybe, 80% of the team daily, because it's so powerful. I use it, whenever I do like an interview for notes, for meetings, candidate interviews, for, hiring, lots of things, summarizing stuff. And so these are just, a few use cases, but basically everyone is, or almost everyone is using AI at Qonto today.
You mentioned hiring there. Do you think AI will mean you hire fewer people in some departments, or does it already mean that?
It will, and it's starting to mean that, more to mean that we can scale with fewer people. So it's more that, on operations or on whatever the topic, probably with AI, let's say one person can produce 10, and without AI, one person can produce, I don't know, but let's say 5 or 7 or maybe 4, whatever the exact number is. But so you can produce more with the same number of people. And so, of course, it means that you will probably have more customers, generate more business. So that's more that we can scale more efficiently, not necessarily that we'll be, hiring less, but having more revenue, more customers with the same team. That's the way we see it.
I've got a few kind of slightly maybe quicker questions for you now.
So I'll have quicker answers.
Yeah. If you could go back in time and spend more time on like one aspect of building Qonto? What would it be?
Yeah, it's a good question. Probably the very early days, we hired people without too much thinking of, how should we organize the company, what it will look like in 5 years and so on. And so probably, thinking a bit more ahead of, what the company will look like, how the company will be structured, how many, layers of management, how many, those kind of things. But it's also so tough to think of those things, when you get started. You just want to get, your first customer, your first employee, your first investor. And so of course it's always easier with hindsight. But I see some companies that I think have kind of thought even more than us about, how they structure the company, and probably were too impatient of also like launching, starting, and getting our first customers, our first team members. And then we kind of adjusted also that thing, over time. So it worked well in the end, but maybe we could have like invested a bit more time thinking about all that.
What would you spend less time on?
It's a good question. I think maybe some very stupid things like logistics. I think I spent quite a bit of time in the beginning, just finding an office space, the small things. And of course, after 3 months or 5 months, the office space was too small, so I had to find another one. And then we also used some, friends kind of offices and so on. So probably that was not the best use of my time. But it was also good to be, very much on the ground, not, and seeing those things, firsthand, and also learning and meeting people through that. So it's, it's not always, it's not fully wrong. There was also some good learnings there by, sharing offices with other companies. We were also using them as, guinea pigs to basically test Qonto, give their feedback and so on. So that was also, some learning there.
What about, is there anything you'd change about how or when you raised funding? Because I did, when I was looking at the list of when Qonto raised, there was a 2022 almost 500 million euro round from the likes of Tiger and KKR. I'm wondering whether that was, funding you would take now the hype has kind of died down from that very bubbly market then.
Yeah, I think there was, of course, there was there was fintech. I mean, frankly, fintech was very hype end of 2021, and honestly, we also had very good numbers and good traction. So we did this very nice round, and I often say that it was easier for us to raise this 486 million euro than the 1.6 million seed round in 2016. So it's a bit crazy, but that's frankly the truth. And yeah, of course, as a founder and as a shareholder, what you want is basically to get what is needed to get to the next stage, so that in the end you get enough money to invest, to grow, and so on, but also to to limit the dilution. And so with hindsight, of course, I would have probably taken a bit less in the beginning, waited for a few more months so that we could get better valuation, and then basically limit or cap the dilution. But frankly, in the end, we're happy. The company is doing overall well. We have enough firepower to keep on growing, to buying companies as we discussed. And it's also it's funny because investors, I mean, the investors' job is actually to invest. So when they see a good company, or what seems to be a good company, their job is to try and own as much as possible somehow of that company. So even if you only need 10, they'd rather try to push you somehow to take 15, because then they get a larger share of the pie. So it's a weird game where if they don't want to invest, you're not happy. If they want to invest too much, you're not happy. And so it's both risk appetite and also, of course, negotiation. So all of these at the same time.
So at the point you decide to exit Qonto, how are you going to celebrate?
So good question, but we're not planning to exit, anytime soon. And most importantly, we're actually celebrating, milestones without waiting for an exit. So we're celebrating, whatever launches of, new countries, new product launches, milestones such as, the 500,000 SME customers that we discussed, and so on and so on, becoming profitable in 2023. So for all these things, we have, from, let's say, small to larger celebrations, with the leadership team, with the whole team. I think it's really important. There is, pressure and ambition and, stress sometimes, but it's also very important to step back from time to time and celebrate, milestones and achievements. So we definitely do that. We have, in a few days, our summer, kind of mid-year event and party with the team. Same, we're preparing a big one also like at the end of the year. And I think it's really important to have that. I think the team really enjoys that. And I must say, I personally enjoy it also very much. So we're happy to celebrate, good things that happen on the way.
So there's not a villa in the south of France you've got your eye on?
Not yet. Well, actually, I go from time to time in the south of France, but more renting than buying for now.
2 final questions. Who is an amazing early stage founder on your radar, or who you've met recently?
Well, I'm meeting quite a few. One that I think is doing a great job is Duco, who founded a company called Duna in the Netherlands, who's working on identity and online identity verification, and a bit to the topic of, fraud that we discussed earlier. So of course, checking ID is super important, especially now with AI, deep fakes and so on. I mean, there's definitely some work to be done there. And I think Duco and his team are building an amazing team on this important topic for financial services, but for the web in general. So I think they're working on really super interesting stuff.
And final question, if you could swap lives with another founder for a day, who would it be and why?
That's a good question. I think I would swap with someone obviously working on a pretty different topic, maybe in a pretty different country. So either, health, I don't have, top of mind, but either in health or maybe in energy like solar. Also had the opportunity to meet Jensen Huang, the NVIDIA CEO, a couple of days ago. I think his life must be pretty exciting at the moment. So maybe also swapping with him would be a good choice.
Amazing. Thank you so much for your time, Alex.
Thanks, Amy, for having me.
Thank you so much for listening. If you want to hear more about what's going on with some of Europe's other fintech unicorns, please subscribe to our fintech newsletter, helmed by my colleague Tom Matsuda. It comes out every Tuesday and has everything you need to know about what's going on in Europe's fintech ecosystem. Please also rate and review this podcast. If you've enjoyed it, please tell all your friends about it, post about it on LinkedIn, do all of that good stuff. And we will be back next week with another episode. Bye bye.